Back to the US now. We're going to check in with Larry Shover, Chief Investment Officer at SFG Alternatives. Larry, great to see you there. Appreciate your time in Chicago. Let's start with your take on trade today. A bit of a slow day. What have volumes been like?
Volume has been very, very low. I mean, the desks are very illiquid right now. Traders are basically in a holiday mode. There really isn't a whole lot. And the only thing we haven't seen today is a lot of gaps or air pockets, as it were, on the upside or the downside. It's just directionless right now. People are almost cheering for the market to close down on the day just to get some normalcy back to the market.
Yeah, why do you think volumes are so low at the moment?
Well, I think volumes are low because people just don't know what to do right now. I mean, we've had an enormous rise in the stock market, as we know, going back to July, which is a demarcation point with the Bumblebee speech, and we've eclipsed a lot of records. We're sitting up here in the S&P near an all-time record, not on an inflation-adjusted basis, but on a real basis. And people just don't know what to do. They're waiting for the next impetus. Is it going to be China? Is it going to be European growth? What's going to carry the day going forward? Right now, the macro is becoming less and less of a concern. Something else has to pick up the baton and run with it.
Yeah, that's the concern at the moment. Interesting your call that a lot of people are actually cheering for a correction. Is that because they want to get in on this rally? They've missed out. I think we call it FOMO, fear of missing out.
Yeah, Kate, that's a great point. I think it's a little bit of both. I mean, a lot of people, including myself, would think that a 3 to 5% correction is in order right now. And I think a lot of people have missed the rally all the way up and have seen the last earnings season that was pretty robust. The numbers in the U.S., we're almost at escape velocity right now. So people are looking for that healthy correction or pullback. And also, they're assuming that we've just lived through this calm crisis mentality, and everybody's waiting for another shoe to drop so they can get back in.
Yeah, that sounds like the case. What about global issues at the moment and how much they're weighing on investors' minds? It wasn't so long ago that's all that mattered to US investors, but now the concerns seem to have been focused more closely at home. Is that fair to say?
I think it's fair to say, although I just don't think here in America we're putting enough credence on that right now, because I look at China quite a bit, and really the numbers are just a mess right now. It's hard to decipher what exactly is going on. Their inflation numbers came out hotter than expected. On the other hand, industrial production, PMIs, and CPI, lower than expected. It gives a case for the hawks and for the doves. I don't know what ends up. On the other hand, we look to Europe. I think Americans are at least happy that the backstop is in place with LTRO and OMT. So the problem's been contained. It's not over. It's been contained. So you combine all that, I think really the point is the macro is not going to impress anymore right now. There needs to be another metric to carry the market for its next leg.
What do you think that metric is likely to be, Larry?
I think it's going to have to be growth. I mean, I think we have an earnings season in the U.S. that's right around the corner. April 8th, I believe the date is, with Alcoa starting the season. People discounted last earnings season. Let's see what happens now, especially with the consumer being taxed with payroll taxes increased or gone back to where they were. What's going to happen with all that? So I think the next metric's going to have to be growth. But, Kate, underneath all that, we still have a lot of room to grow in the housing sector, and that's going to help us with employment, consumption, et cetera. I know it's becoming a tired story, but what took 6 years to undo itself, it's going to take a long time, and I think we have a long way to go still.
Okay, with all of that in mind, how are you investing at the moment?
Well, I'm a managed futures mutual fund, so we're exposed to every commodity that's traded on the exchange, and we take long-term and short-term biases right now. So it would be fair to say that we are long gold right now, and we are short rates. But that's from a macro scale. I think that is something that not day to day, but macro looking, we think that makes sense given the unknowns in our environment.
Gold's been pretty sluggish recently. Are you still fairly confident with that call on gold?
Yeah, I mean, I think when you look at the gigantic big picture, it's really easy to say that gold is severely overpriced given the alternatives out there, especially the cost curve to platinum, et cetera, et cetera. On the other hand, we're living through a worldwide experiment, monetary experiment that we've never gone through before. And frankly, who knows how it's going to end up. So it's hard for me to make a case that gold is going to go a lot lower, especially when you have central banks and you have more jewelry demand around the world. So I think will we see a gigantic rise in gold price this year? Probably not. However, I do think it makes sense to have some of it in your portfolio.
Yeah, do you see it more as an inflation hedge or a safe haven play?
Yeah, I don't see it as an inflation hedge because I personally think the evidence to support that as an inflation hedge is murky at best, and I think there's better ways to hedge your inflation risk. I think it's more of a safe haven, more of the fact that, don't fight the world's Feds. I mean, they are buying, those that have FX reserves are buying gold steadily every month. I think it's just more of a safe haven to the unknowns of this worldwide printing that we're seeing.
Okay, Larry Shover, thanks so much for chatting. We love hearing from you over there in Chicago.